Okay, let's dive right into this. Welcome to this explainer. Today, our goal is actually pretty simple. We're taking Apple's Q2 2026 financial reports, and we're totally demystifying them. We're going to go on a really clear, fascinating journey, literally following the flow of capital into and then right back out of one of the most profitable companies on the face of the earth.
Now, right off the bat, I want to ground us in reality. Every single data point, chart, and figure we're about to explore, it's derived directly from audited official corporate documents. We're looking straight at Apple's actual SEC Form 10-Q and their official Q2 press release. No rumors here, no speculation, just the hard audited numbers.
And we really have to start right here. $111.2 billion. That is the top-line revenue figure Apple generated in just the March quarter alone. To put that insane scale into perspective, we're talking about a 17% year-over-year jump. I mean, in just 3 months, Apple brought in more revenue than a lot of entire nations do in a full year.
But, numbers alone can feel a bit cold. So let's bring in a little human commentary to contextualize all this hard data. Tim Cook actually noted that this record revenue was fueled by, quote, extraordinary demand for the iPhone 17 lineup, along with exciting new intros like the MacBook Neo. So this tells us that despite Apple's incredibly varied businesses, a fresh, compelling hardware cycle is absolutely still the foundation of this massive revenue explosion.
So here is our roadmap for today. First, a record-breaking quarter. Second, hardware and services power growth. Third, global sales and market performance. And finally, managing the cash mountain.
All right, part 1, a record-breaking quarter, the headlines.
The crucial point here is really wrapping our heads around the sheer velocity of this growth. We see total revenue is up 17% to that $111.2 billion. But look right below that. Diluted earnings per share, or EPS, is $2.01, which is up 22% year over year. Think about that for a second. Their profits are growing even faster than their sales. Plus, they generated over $28 billion in operating cash flow in a single quarter. It's just wild to see a company of this massive scale accelerating their profitability this quickly.
Moving on to part 2, hardware and services power growth, the drivers.
If we look at Apple's modern business model, we can see a massive slice of the pie is obviously still driven by the iPhone, bringing in nearly $57 billion. But right next to it, check out the incredibly rapid rise of their services sector, raking in almost $31 billion all on its own. Now, Mac, iPad, and wearables each represent vital multi-billion-dollar ecosystems, sure, but the iPhone and services? Those are the twin engines really driving this spaceship right now.
And to connect those billions back to everyday consumers like you and me, we have to look at the specific hardware that drove these sales. This quarter really saw the impact of the new iPhone 17 lineup, the introduction of the iPhone 17e, that incredibly fast M4-powered iPad Air, and the brand new MacBook Neo. This fresh product lineup is exactly what enticed millions of people globally to upgrade and open their wallets.
Now, this brilliantly illustrates the striking business reality of Apple's margins. When you look at their physical products, they sold about $80.2 billion worth, and it cost them $49.2 billion to make those physical goods. But look at services. They sold $31 billion in things like the App Store, iCloud, and Apple Music, and the cost of those sales was only $7.2 billion. Services literally cost a mere fraction to deliver compared to physical products. It is a massive structural profitability lever for the whole company.
Okay, part 3, global sales and market performance, the footprint.
Geographically speaking, the Americas segment is firmly in the lead at $45.1 billion, followed by Europe at $28.1 billion, and Greater China at $20.5 billion. And what's truly remarkable here, and Tim Cook actually highlighted this in the press release, is that they experienced double-digit growth across every single one of these geographic segments. Literally nobody was left behind.
But there is a very specific nuance hiding in the financial footnotes that I definitely want to draw your attention to. The filings note that in Greater China, iPhone revenue represented a moderately higher proportion of total net sales compared to their other global regions. So what does that mean? Well, it tells us that while services might be totally booming in the Americas and Europe, the Chinese market is still particularly reliant on the physical iPhone hardware itself to drive overall performance.
So we've traced the money coming in from the products, the high-margin services, and all the global markets. But it begs the ultimate question, what does Apple actually do with all of this cash once they have it?
Which brings us to part 4, managing the cash mountain, capital allocation. Just to understand the sheer scale of the liquidity we're talking about, look at this number. Over the last 6 months, Apple generated $82.6 billion in operating cash flow. That is the amount of cold, hard cash generated purely from their day-to-day business operations, before any outside investments or financing. It's just an immense, mind-boggling scale of liquidity sitting there waiting to be deployed.
So where does it sit exactly? Let's walk through the top layer of their balance sheet. At the end of the quarter, Apple was holding $45.57 billion in pure cash and cash equivalents. On top of that, they had another $22.93 billion in current marketable securities and over $30 billion in accounts receivable, which is basically money owed to them very soon by customers and partners.
Now you might be wondering, what exactly are these marketable securities? Well, briefly, they're highly liquid financial instruments. Think things like U.S. Treasury securities and corporate debt, because, Apple doesn't just put its billions in a regular checking account. They park these non-cash reserves in these highly secure securities to safely generate yield. Between their current and non-current assets, Apple holds well over $100 billion entirely in marketable securities.
And speaking of $100 billion, that perfectly brings us to the headline-grabbing action taken by the board of directors this quarter.
You see, after operations and capital expenditures, a massive portion of the money out goes directly to rewarding the shareholders. Apple's board just authorized a new $100 billion stock repurchase program. Basically, they're buying back their own stock to increase the value of the remaining shares. And on top of that, they increased the cash dividend by 4%, resulting in a new payout of 27 cents per share. For a huge chunk of that cash flow, this is the ultimate destination.
So all of this builds into the complete circular life cycle of an Apple dollar. Step 1, record device and service sales bring the money in. Step 2, highly profitable margins, especially from those services, preserve that capital. Step 3, that operating cash flow builds a literal mountain on their balance sheet. And step 4, that capital is aggressively returned right back to the shareholders through buybacks and dividends.
Which leaves us with a truly fascinating question to ponder. With record-shattering cash flows, incredibly optimized margins, and a newly authorized $100 billion buyback program, is Apple's greatest product today its gorgeous hardware, or is it its absolute masterpiece of a financial engine? Thank you so much for joining me on this explainer. I really hope this breakdown helped you grasp the immense scale of this business, and I highly encourage you to keep learning and exploring the actual numbers behind the products we use every single day.